What's going on, everybody? Welcome to Lunar Beaches Crypto, where we ride the waves of the crypto market all the way to the moon. Hope you're all doing well. Today, we're going to be going over reconfirmations and a little bit of trading psychology, because it seems to be that most traders, or a lot of new traders, and even some seasoned vets tend to struggle with their confirmations and their reconfirmations. Now, what are these reconfirmations? We're talking about getting into a trade, knowing when to get into a trade, and believing that that's a good trade to make, but sticking to it, and also knowing when to get out of the trade instead of round tripping your trade. Round tripping being market goes, you get into your trade, you watch it go in your direction, and then you fail to get out because your FOMO kicks in. You get a fear of missing out on the extra profits, so you fail to take profits, and then ultimately the price reverses and comes back against you and takes you out. We don't want that to happen, so we're going to try and talk about that in this video, and then I'm going to give you some ways that hopefully can help you succeed and make those decisions and stick by them and be profitable in your long-term trading journey. First thing I do want to point out, when it comes to trading, you do not want to be stuck on the last trade. What do I mean by this? Let's say you enter a trade and you take a loss. That loss has got to leave your brain before you even go into the next trade. Okay? Because you can't let the last trade affect your future trades. You will lose trades. It is a guarantee in this market, in any market. You will lose trades. No one has a 100% hit rate. So first and foremost, you have to understand that. You have to understand that no one has a 100% hit rate. If they do, they're lying to you. You can have a high win rate, but that doesn't mean that you have a 100% win rate and that you never lose. Even the best traders go on losing streaks. I myself, I'm not saying I'm one of the best traders. I'm just saying I myself go on losing streaks. But in the long term, my win rate wins out and I become profitable. And over time, I am profitable. That is the key to, one of the keys to success in trading is just being consistent, sticking to your rules, and having discipline. All of this all really revolves around discipline in your trading. Now, it's an uncomfortable fact that if you are not disciplined in your outside life, outside being outside of trading, you will likely not be disciplined in your trading. So before you even start to trade, I recommend you start getting routines set in your personal life, your outside life, because that will then translate into more consistency and more discipline in your trading. So that is one of the biggest things that you have to get down. Just plain and simple, get discipline in your life. It sucks. I know it sucks, but it's what you have to do. If you don't have a routine, and if you can't stick to a routine, you will fail at trading. Period. Plain and simple. So let's not do that. Let's start getting into routines. Let's start developing habits, good habits, and being disciplined. And then everything else should fall into place. Once you get discipline in your life, once you get that straightened out, you get your routine set, trading becomes so much easier. Then when it comes to the charts, when it comes to the trading, what you need to do is have a rules-based system. You hear other creators, traders, great traders talk about it all the time. If then that. Whatever the phrase is. If this, then that. There we go. If this, then that. Okay, so if we see this, then this is what we're going to do. Okay? Don't overcomplicate your trading. Don't overcomplicate your analysis is really the better phrase. What I mean by that is don't throw 1,000 indicators on your chart, okay? Maybe 3. Have 3 indicators on your chart, and that's max probably of what you need. Outside of that, it becomes a lot of noise, and it creates a lot of second guessing. And that second guessing is why you will hesitate to take a trade, or you will jump into a trade through FOMO because you're afraid of missing out on the trade, and then price will turn against you a lot of the times, or it's just not going to be as profitable of a trade. So with that said, let's just go ahead and look at the charts and see what we can do to maybe help you in your trading journey and in this whole concept of psychology and reconfirmations. Now I'm going to keep myself off of the screen for this so that we can see all of this. I might even have to lower this logo a little bit. There we go. All right, so I just got plain white chart. We're right here. We're on a Bitcoin. We're live on a Bitcoin chart. Confirmations can be a few things, okay? So what are some things that we can add? I am going to try and use only free indicators so that you guys, anybody, can use these indicators, okay? And use these as a trading strategy. So we'll just do a standard RSI, Relative Strength Index, standard RSI, which I think is what this is right here. RSI, standard RSI, so I'm going to get rid of the bottom one. So we've got one indicator. Now let's add a second indicator. Let's just do a moving average. Okay, so let's go to our indicators and let's do a SMA. So that's a simple moving average. All that a moving average simple, there we go. All that a simple moving average is that it takes in the last, let's take a click on it, the default is 9 candles, okay? So it takes in the last 9 candle closes, that's the source, and it plots a line on where the price is based on the last 9 candle closes. Now, these are lagging indicators. You will hear a lot of traders talk about how, lagging indicators are terrible and all this stuff. But truth is, it's just an indicator. It's just there to kind of help you see where the market could potentially be. Now, personally, I would bring this up to we're going to do a 100 SMA. So when I see price is above the 100 SMA, I am thinking about taking a long. Second point, second indicator is I'm looking at the RSI and seeing if we are above the 50. Above the 50 means bullish momentum. Below the 50 means bearish momentum. So if we have both bullish, if price is both above the 100 SMA and above the 50 on the RSI, then we can look for longs. And then from there, we just try to find a potential third confirmation, which could be a volume, spike in volume that shows, hey, we've got a big push in volume that broke our EMA. And now we're just looking for a pullback for an entry. And that pullback could be this pullback right here. So we break above the 100 EMA. We kind of consolidate around it, break a little more above it. Volume is steadily starting to increase as we pull back on our RSI, and then off and away we go. For me, the long would be, okay, we're above the 50. We got to pull back to, or the 100, sorry. We're above the 50 on the RSI. We're above the 100 EMA. Off of a spike in volume that pushed price above and closed above the 100 SMA. We get a pullback to the 100 SMA, and we maintain above the 50. There's also another thing that we can add to this for just one more piece of confirmation, and that is a bullish divergence. Now, this is going to be more of a hidden bullish divergence. It is flat momentum, which your RSI is a momentum indicator, and it is price increasing to the upside. So what this shows is that even though the momentum has pulled back, it has held as price is pushed up and held the 100 SMA. From here, we just say we take our trade, we put our stop loss below the low of the range, this little consolidation range in here, and then we just aim for the highs. Now, when to exit? For me personally, I am taking pieces out at every high that I see to the left. Now this is going to be a high to the left here, so I'm going to take a little piece out here. And then from there, once I take out one high, I'm going to move my stop loss to break even. And then I'm just going to let the rest of the trade ride and take profits along the way at each high. So here's a high here. I'm going to take profits whenever price breaks that high there. When the price comes up to this high, I'm going to take profits when price comes up to there. The final high within the range is going to be this one up here. This is the one that I'm going to want to get completely out on. I'm just going to go ahead, take my profits, and get out. I could take a little bit here, and I can take a little and take the rest out here. And there you go. You have a profitable trade. Now, the number one thing to remember in this is to stick to your rules. If you stick to your rules and you play the same scenario out over and over and over hundreds of times, that's one thing that a lot of new traders have to get used to, is that just because the trade doesn't play out now doesn't mean that over 100, 200, 300 trades, you won't have a winning win rate, a profitable win rate. If you have some type of strategy and with rules, and I recommend only having 3 or 4 rules that you got to check. Are we above the 50? Check. Are we above the 50 or are we above the 100 SMA? Check. Are we above the 50 RSI? Check. Do we have some type of divergence? Check. Are we pulling back to the 100? Yes, that is our entry. We take the trade and we write it to the upside. If it reverses and takes you out, that's okay. You just wait for the next setup and you just follow your rules and you just stick to your rules. And then over time, you will be a profitable trader. It's not 100% guarantee, but I understand that because I understand that emotions do come into play. You get a fear of missing out. You want to try to get into like every trade. Let's say maybe even, let's see. You see the setup, you've got the entry, your stop loss, your target already, but instead of clicking the button, you freeze up and you think, let me just check one more thing. That's where you tend to lose in the trading game, is when you say, let me just check this one more thing. Like maybe it's another indicator, maybe it's scrolling through Twitter for validation for maybe another trader, maybe you're waiting for a feeling, I don't know. But meanwhile, the market doesn't wait. The opportunity either takes off without you or leaves you FOMOing into a bad entry. So just don't do that. Stick to your rules and you will be fine in the long term. But that's why you have to be disciplined. And you don't have to be robotic, okay? But it is kind of being like robotic, okay? It's just having a system and it's following the system no matter what. No matter what news happens, no matter what, just follow your system, and in the long run, you will be a profitable trader, especially if you know how to manage your risk. Personally, I only risk 1% of my account per trade. Just 1%. That doesn't mean my stop loss is at 1%. That means 1% of my account is being risked on the trade. And that's it. So if I'm sitting at a 0.5, we'll just say 0.5 to make the number easier. We'll say a 0.5 stop loss. What is my 1% that I can lose? If I have a $500 account, let's say $500 account, I can only lose $5 per trade. All right? So when you enter this trade, you've got to figure out the math that says, what is that 0.5%? How does that equal $5 for this trade? And that's going to depend on the margin that you use. I have found a way to calculate this depending on your leverage. The way that I calculate this is I take my margin or my amount of money that I can afford to lose. So if it's $5 on a $500 account, if it's $1,000, that's $10, and so on and so forth. But if I'm at $5, that's as much as I can lose in this trade. I know this looks like an S, but I can only lose $5 on this trade, okay, on a $500 account. So what I do is I take that 5 and I divide it by this number here, whatever my stop loss is going to be. So bringing up a quick calculator. All right, so now that we have the calculator up here, let's just go over this scenario. So let's say we have a $500 account. So that means 1% of the $500 account is $5. We take the $5 and we see what is our stop loss sitting at? Our stop loss is at 0.51%. We're going to do 0.5 to make this easy. So $5, we're going to divide by 0.5 equals $10. Now on 100x leverage, which is what I'm going to be using for this scenario, we're going to do times 100, because that's your leverage, $1,000. Okay, so you're using $10 on 100x leverage, which equals $1,000. Now, if you get stopped out, so let's do minus 0.5%, is $5. You're only going to lose $5 on this trade. If you were to ride this all the way up without taking any partials, that's 3.3%. So we'll do $1,000 plus 3.3%, and you make $33 on the trade. Now, likely that'll cut down if you're taking out partials, but at least you're making profit. And the name of the game is to not try to hit the home runs, but to just take profits. Be a profitable trader. There are other ways, or we can go deeper into figuring out the leverage that you want to use, or figure out what margin you're going to use for what leverage. We can do another video, a whole video on that. But for now, I'm just going to use that one example. And yeah, so like I was saying, the main thing, guys, is just be consistent in your trading. I know a lot of people struggle with this, even some people that have been trading for a little while. Consistency is the key. Discipline is the key, and they kind of go hand in hand. You got to have the discipline in order to stay consistent and to stick to your rules. And then in the long run, you will become a profitable trader. How do you fight the psychology? That's difficult. For me, it's just about understanding that this is math, this is logic, this is how things play out in statistics. This is how things play out over time. You're not going to win every trade. You're going to go on losing streaks. The key is to not let those get to you. It is to stick to your plan, stick to your rules, even when it seems like the rules aren't helping or aren't doing what they're supposed to do. But if you're only risking 1% of your account per trade, you should be fine in the long run. And that's the thing. It's all about a marathon. Trading is a marathon. It is not a sprint. It is not a get-rich-quick scheme. And it gets, honestly, trading should be boring. It shouldn't be exciting. It should be boring. Trading should be boring to you because it should be mundane, meaning repetitive, doing the same thing over and over again, day in and day out, and just letting the markets provide you what it does. So with that said, I hope this video helps you in some kind of way. If it does, please leave a comment down below. Hit that like and subscribe if you enjoyed this content. And if you would like me to go in deeper, I will try to come up with something else to help you guys out in any way possible. If there's any other things that you would like me to go over in trading to help you out, please leave a comment or reach out to me on Discord. You know where to find me, most of you. So, but if you are new, just check out the links in the description, or hey, go go to Alex O Crypto's Discord, go to Alex O Crypto's channel, and the Piper Academy channel, where I do a live stream every single night, Sunday through Thursday, and ask questions, and I will give you the best answers that I possibly can. But until then, I really hope that this video helps you out. And if you need any further assistance in this, don't be afraid to reach out. You can find me on X at Lunar Beaches. I'm always open to helping other people learn how to trade. And with that, thank you for watching. Like and share. And I'll see you guys in the next one. Mad love. Peace out. Ride the waves. Later, Gators.